can see the board better. Okay, good afternoon, everybody. Wonderful. So, I think this afternoon, the session is different, so it's not prayer and any spirit, Holy Ghost, anything like that. It's so important. Normally, it's good to give context when you are talking about anything to do with property. Property, you can talk about it. You don't have to really have a qualification to talk about properties. That's one of the things you do. There are certain aspects of investments you cannot talk about them if you are not qualified to do so. And so, I'll just give you a good background of what I've done, so that you understand the context under which this session is being done. And of course, as Pastor said, sometimes these sessions, it can range from £500 to 8,000, depending on where you go. You know, I know people that have gone on seminars like this, and they've paid that kind of money. Gone into Manchester, do a seminar there for a day, 2 days, 5,000, they come back, right? So my background, so of course, I put this there. It's not really to blow my horn because it's irrelevant. You know, by God's grace, God has helped me to go through this. It's first God that allows us to go through that. Of course, so one of the first things, of course, I've got a PhD. My PhD was in robo-advice in banking operations. So yeah, I did a lot around what in the banking world, what happens when you go into a bank, from meeting a personal banker to meeting a mortgage advisor to meeting a financial advisor, and then they sit down with you, they talk to you, and they give you advice. My PhD work was really looking at how that whole operation of the bank goes on, and what the benefit of robo, what we call robo, it's where it's more computer. So it's like computer advice. So things have evolved now where when you meet a financial advisor, they will normally sit down with you. We go through what we call a fact find. And then once we've documented those things, we will then, on the back of the fact find, now generate advice. And then once we generate advice, we then give you what we call the suitability letter. Or now it's changed from, according to the FCA, called the reasons why letter. And then we give you that document to say, on the basis of all the advice we've given, every conversation we've had, these are the rationale behind my advice, why you should do this, why you should do this, why you should consider this. And then you give the client an informed decision. They can make an informed decision, and then they come out with a final response. And what Robo is doing now is that you get to sit in front of your computer at home. Now, even with the advent of AI that's gone so far now, you sit in a computer at home, you answer a few questions. What is your name? Where do you live? How do you work? What income do you get? What do you like? What don't you like? What are your plans for the next 2 years, 10 years? And then the computer will now use some algorithms to make some investment guideline document for you. And then on the back of that, you can then flow. So those are parts we call robo-advice, various things that happen around that. But I think the conclusion of my research was that computer is good for gathering big data and then assimilating information. But the role of the human person cannot be taken out, especially when it comes to making decisions, because you will still need a human element to make certain decisions. For instance, if you have a couple, 2 partners, and then you meet one of them, and then you go through an advice thing with them, and the decision of one of the partners in the absence of the other partner can turn out to be wrong, because you might make the decision on the basis of the one you met, but then you've got to understand that their partner may have a view concerning that plan. And therefore, if you conclude the meeting with just the one person without not considering the emotions and the feelings of what the other person is, and that's why computer doesn't get it. So computer will not be able to assimilate, even when you are sitting down, what their emotion is. Of course, now they are bringing a lot of things now that the computer can read your mind, it can read your emotions, it looks at your face, it can detect. A lot of things are coming, so AI and those things are growing very, very, very much. So that's a concept around my PhD work. CMAP is, of course, certificate advice in mortgage advice and practice. That is the minimum. We either have a CMAP or what we call the MAQ. They are just 2 qualifications to be able to advise in mortgages in the UK. You either have to have a CMAP. One of them is by the Chartered Institute of Insurance. The other one is by the Institute of Financial Services. These are the 2 organizations that would do that. So CMAP allows me to be able to give advice on mortgages and properties extensively. And DIPFA is a diploma in financial advice, level 4, that allows me to be able to give advice in investments, again, in those aspects. So that's not just mortgages, that looks at financial advice, stocks, shares, investments, and those things. CIFA, again, certificate in financial advice, again, that helps you to be able to talk about a lot of things. Stocks, shares, investments, unit trust, whatever it may be. Advanced CMAP is, of course, there is an upgrade to just standard CMAP. CLTM is lifetime mortgages. Lifetime mortgages is there are people that the elderly that are in our midst sometimes when most of the elderly will normally have properties that they've paid off their mortgages, and then sometimes they want to release money from their property. Now they don't want to. At that age in their life, they don't want to be having a burden of having a mortgage. So they would see an advisor like me who has got qualifications in lifetime mortgages, or what we call equity release, where you can then advise them on the bank giving them money, and then the bank benefiting from the equity in their property. And then they will effectively live on that money, God forbid, till they pass away. And then when they pass away, the equity is now valuation is done. The bank will say that this is the new equity, this is what was given to your mom or your dad, and this is the difference that is left for you guys, and then you can have it. That's what lifetime mortgages qualification allows you to do. Yeah, and then of course I'm a member of the Institute of Banking and Finance. I also go financial intelligence. I'm a financial intelligence specialist from the LIBF, so I do a lot of compliance now, a lot of financial crime. It's one of the big things I do as a financial practitioner. Yes, and last 3 months I was inducted into the International Compliance Association as a fellow. Of course, just based on my work that I've done in the industry for some time now. So yeah, ex-Barclays guy, 16 years Barclays, NatWest 7 years, and then I've just been working in the city as a head of compliance now for an organization, and then just a few other things. So I also do mortgages, and I still do mortgages on my own, authorized through the FCA. So I do it as and when, especially now that I'm almost doing 2 jobs. Right? So, I got tired of the bank, and then I left the bank after 16 years, and I'm using most of my time doing a lot more around what we call follow the money, trying to find out the dodgy actors, people who are trying to defraud people, and helping put policies in place for organizations, and then do a lot of work with the FCA, just because that is the world we are going in now. And then in my spare time, I do some mortgages. So I still write cases for a lot of people. I just finished a case, one of my clients was very excited, 3.2 million. And he was like, oh, this is great. I said, yeah, make sure you pay the mortgage. You see, so that's important. So there's always a disclaimer. Anytime you see a bank document, you always see underneath it, it says that your home may be repossessed if you don't keep up with your repayments. It's always a disclaimer. And then there's also another disclaimer in investments, which we say that the capital you put in may not be the same amount you get on return, because it might rise up or it might fall. These are standard disclaimers. Anytime we are talking about mortgages or investments, we need to make the person aware. So if you are going to do investments, it's important that you, especially if it's something you're going to invest in, some kind of stocks and shares, you should be willing to lose the money. If not, you shouldn't put the money in. So that's part of the things that I will always tell you. But a lot of things are changing now. We used to call something called TCF, treating customers fairly, under the FCA rules. It's not been taken away now, but now there's been additional things to help safeguard customers, safeguard the money of customers, safeguard the investments of people. So let's say recently, about 2 years ago, I think they brought what we call the consumer duty, and then that is also implemented to help, what we call consumer outcomes, to make sure that everything that is happening, the customer is being advised well. You must, similar to what I was trying to explain about the robo-advice, you cannot just make a decision on the basis of one person and then say this is the final thing. You've got to make sure, was this the best result for the customer? Was this the best result? It's no longer, advisors used to be able to, previously, I could charge 1% for a mortgage that I'm doing for a customer. So if you're doing a 200,000 mortgage, you just charge them 1%, and then the bank will still pay you, the advisor, some extra money. Now the FCA is kind of cut those things down and say that, is it reasonable that you are charging 1%? And there are some cases, if it is complex, what we might call an adverse case, if someone has got some kind of defaults or CCJs or missed payments, you are allowed to be able to charge them higher. And you can even charge 2% on a case. But now, under consumer duty, price is one of what they call the 4 P's in consumer duty, and they want to find out, is the price right? I mean, you're helping the person who is just trying to get out of this, and you are charging them 2%, and they'll be missing payments. Is that the best thing? So now those things have all been toned down, where you've got to probably be charging like 300 or 250 or 500 or something like that. But normally if you see a client, normally would I have a first meeting with a client, my fees normally are like £300. Right? So I see a client, I sit down with the client, about £300. I'll charge them, and then if the case goes through, I'll probably charge them another £600. And then that's it. It's not. It doesn't mean a customer has to go with you. It's not false. And it's not extortionate. Now, as I was also explained to you, we had 1%. I used to do 1%, and those were brilliant. But you'd have to also justify to the network. You must justify to the network that you are working through, or if you are directly authorized with the FCA, you must justify why you charge a fee. There's got to be a rationale for it. So a lot of advisors, a lot of colleagues I know, they just do everything on telephone with their clients. They don't get to see their clients. I get to see my clients because I'm an old banker. I love to meet clients. I want to see. I don't want to do, and especially now I'm in compliance. So my mindset about advice now is very different. I want to meet the client. I want to know who I'm dealing with, so that I can interact with them. So that was my defense when I referred it to the FCA. That look, this is the reason why I would charge 900 if the case completes. If it doesn't complete, fine. Then it's only 300 for my time, my efforts, for everything. Because yes, sometimes you used to meet a client, you can spend 2-3 hours on their case, 4 hours. You get them an approval in principle. They go and finish the mortgage with somebody else, and you've literally wasted 2 days of your time for nothing. So those are some of the things we do. Okay. I thought my thing was working. Right, let's see. Are we back on? Okay, we are good with time. Okay, so so I'll talk a bit about what is property. I'll talk a bit about what your current state. I'll talk a bit about your credit, and then property types, fees, buying a house, affordability, sourcing. So the session is more geared towards property today, and I'll touch on several other aspects around helping the whole property things. So certain things that can help you very much. So Pastor, if we can go on there. Once you get your battery, you can give it to me, and I'm happy to carry on. So one of the important things is, what are you looking to achieve out of today's session? What are you looking to achieve? Very important. What goals do you have for this journey that you want to be on? And what is your end game or your end plan? What is your end game or your end plan? How committed are you and willing to be doing this? because you can hear everything and still not do anything with it. Yeah. I've met people, I've gone into some sessions with people some years ago. They had every single thing we can teach them. And then 4 years later, you went there, some did nothing with it. They're still around. In the same meeting, some of people that took some of the little steps, some of them are today homeowners. Others are today doing something more. Some are 1 property, 2, 3. I have a client that has 100 properties. And they didn't start, when you talk to them, they didn't start from 10 properties. They started from 1. Some started from a council flat, and then they moved through the journey. So there are various things we can look at. Do you see yourself, your family, and life benefiting? If it's not you, then it's fine. And are you ready and willing to be able to do this? So what is property? So property, I think Pastor said, use Bible to give it a very great example. And he said that the Lord gave Abraham land, estate. So property refers to several types of assets. So normally in the investment, when we say property refers to different things. It's not just a house. It refers to types of assets. But the asset we are looking at today is brick and mortar, the actual physical building. So of course there are stocks. I was telling you about stocks, shares, assets, unit trust. Those are all called property in the investment world. So focus is on bricks and mortar. Why? Because you can locate it. If I have a house, you can see it here. If I have a building, you can see it there. If I want to sell it, I can go and sell it. If I want to monetize it, get my money out, I can do it. If I want to rent it, I can rent it out, in case your circumstances change. So there are people, they might have a house, something comes up, and they've just got to sell everything. Some people can be there. All of a sudden, I had a client of mine that called me, and he said, Ado, I've just had a big HMRC bill, 150,000. I said, what? What did you do? Because it doesn't just come up like that. 150,000 doesn't just come up from the HMRC. And unfortunately, the HMRC can be very interesting people. And sometimes something small, and before you know, compounded over years, and then they just come and shock your whole life. So then look, my salary can't do this. What did we have to do? Thankfully, he had 1 or 2 properties. So we had to try and then release some money from some of the properties that had equity, and then pay, and we could even do all of it because there wasn't enough equity. But there was enough to be able to make a payment plan with the HMRC and say, look, we'll do this, and then once he pay you this, the rest will take time and pay you. So you can do a lot with property and use it for personal care, for business, and other things. Property is also, as Ben said it, property is also is proven to be one of the most durable asset classes in investments in the world. Regardless of where it is, whether it's in the UK, Asia, Africa, wherever it is, property is one of the most durable assets everywhere you go. So you can have property here, you can have property in the Caribbean, and it's still one of the most durable things to have. It's a very good thing. Very good thing. Pass, you can go. So statuses. These are statuses that we meet a lot when you meet clients. You meet people in different levels. You meet somebody who is renting a place. You meet another person who is sharing with friends. You meet another person who may own. So you might be in 1, you might be in 2, you might own your own property, or you might own properties. Maybe you are living with family, or you're living in a company accommodation. There are people that are benefiting from a company accommodation because of the type of job they are doing. And then there are people who today in the care world, I see a lot of clients now sometimes who are, because of the care world, they are doing what they call the live-in. So even their own property, their own houses where they're renting, some are not even living in it now because most of their time they had work. So you could be in any of these, statuses. Now, let's go on. I'll tell you a few more about this. So if you are renting, what are some of the pros and cons? So very simple. Renting can be expensive or it can be normal based on the house, based on the location, based on the situation and the circumstance. May leave you no choice other than just rent. Sometimes your situation, there is no other option. You got to rent. Even if you have the greatest desire that, look, I dreamt I was living in a 5-bedroom mansion and it was situated along the riverside. And in the morning when I wake up, I just put on the coffee and I'm just looking at the sea breeze. When you open your eyes, you will still need to get somewhere to rent. Because after that beautiful dream, there are two things that you need. Money, number one. And number two, income. Very important. You need money, but you also need what? Income. And later, when I go on to it, you will understand why. Because there are people who have money, but they don't have income. And the money they have is not enough to give them the house they want. And so they need income to get the bank to be able to advance them the additional. So not everything is money. Income is more important. So there are some places renting is very important and it's very good, right? And one thing, all stages are not permanent. No stage is permanent. Again, thank God, and this is not me being spiritual because I'm a Christian, but no stage is even permanent. Even if I'm not a Christian, it's just not permanent. It means you can be in renting today, tomorrow you could be owning your own place. You could be owning your own place in a few months' time, you could lose the whole thing. When the crisis came in 2000, there were clients that we knew in the bank that walked into the bank and handed their keys to us. They handed their keys to us. Do you know why? Because they couldn't afford it. Because one of the things that brought the crash was because the mortgage industry the property industry came to a certain field where they were now overvaluing properties. Valuing them. So a property that is probably valued at 200, when the valuers were going in, they were now valuing it at 300. Meanwhile, the real value is 200. And then the banks were lending 100% those times. So those were the times where we had Northern Rock was even a bank that was lending. They were lending 100%. Some of the banks were now lending also for you to set up the house. So you think about it, a first-time buyer gets 100% mortgage, and then they are also giving like 10,000 to be able to buy the furniture and then set up the whole home. Immediately, if that house was not genuinely 200,000, you go into what we call negative equity. That is what brought the crash. Because at a certain point, the FCA and Bank of England realized that most of the mortgages were becoming so expensive. And when the banks went in to revalue the house, the houses were more overpriced than the mortgage. So let's say they would go into a house and the house was 200,000 mortgage, and then they value it and the property is 150. So the question is, how did the bank lend 200 to a 150,000 house? That's what we call negative equity. So the bank started forcing everybody to get their money back. And some people couldn't afford it. And so they just brought the keys to the bank. Take the house. And they are gone. And of course, you know, when you get repossessed in the credit world, unfortunately, it's a disadvantage. Because your name goes in a record where when we are doing credit searches, it will say, have you ever had repossession? Your name goes on that list. So it's not great, but life happens. And you can repossess your house and then it's fine. During that time, I lost one property. And because the tenant refused to move. Just refused. And unfortunately, as they always say, the law is blind. Because you've seen the image of the laws. I think it's got this, the American one, it's got a blindfold thing on that lady that is standing there with the scale and the balance. And they say it's blind because, as you know, if you want to evict somebody in this country and they decide they don't want to go, you could be in the worst situation. They could drag it till you get court possession. The guy refused to leave the house for 6 months and would not pay rent. And I had another mortgage I'm paying. So where do I go and take the money? Do I go and steal money to pay for that one? Because I can't lose where I'm staying to save my own house. and I have to lose the house. And that is me in this industry. And I was in the advice world still. So I had to tell the bank, I said, this is very unfair. Let me go into the house. You don't want me to go into the house. No, you have to wait for the court. The court, it took 1 whole year. He stayed in the house for 18 months. They didn't pay 1 penny. By the time he left, the bill on the mortgage was not worth it. Pointless. So renting is great, but these are some of the disadvantages. If you get the wrong tenant, it can become your wildest nightmare. You can have a tenant that decides that they don't want to move. They go in, they don't open windows. I had a tenant in one of my houses, doesn't like to open window. After 6 months, mold is coming up in the whole house. And I go and I say, listen, you've got to open these windows. That's why we've got latches on them. They've got latches. Latch the window and let it come. And even if you don't want to latch it, you know the windows have got a little thing there. You can open it and the air comes through. That's why they created it. The guy said to me, no. My children are getting cold. I said, okay, close this, but open these things here. Open the vents. You damaging the guy. By the time I realized, the house was a mess. And again, you have to, it's like you are begging them to try and leave your house. They don't want to leave. It's something else. So property is exciting, but when you come across a tenant that wants to be a problem, it can be a very bad experience. So it's part of the things you have to do. So you have to put in a lot of measures. You have to go into some of those things where you either have insurances to protect some of these, in quotes, terrible tenants. So part of it. Renting is good. And sometimes you might have to share, and I think it's fine. We can move on. Sharing. This could be cheaper depending on what led you into that. Because sometimes the situation you are in, you don't have enough to rent. And so you need to share with somebody. And always just remember, as I said, it's not permanent. You might have to rent to somebody for about 2, 3 more, 6 months, 1 year. No problem. A time will come, you can move on. That's the way it is. I rented for so long. In 10 years, I moved 18 times. In 10 years. 18 times. From South London to East London. In fact, I've lived in all the 4 zones. South London, East London, West London, and then North London. I've lived all of the places. And in some of the places, I lived in the West Zone. I was in Elephant and Castle. I went to East Ham. I went to Tottenham. I lived in Broadwater Farms. I've lived everywhere you can think of. Yeah, everywhere. And I remember some time when my sister was coming to visit me as a young guy that was studying, and then some landlords, when you have a guest, they charge you more for staying in your room. Up till today, they charge you more for having another person because they are going to increase the electricity, the water, the gas use. So because I was a student, I didn't have money. When my sister is coming, I need to find a way not to make sure my landlady knows. Because I can't afford to pay the extra money. So when I get notice that landlady is coming, I get my sister out. And then sometimes I was in East Ham. She has to go and stay in McDonald's. Stay there for hours. And she just come from Ghana. She was just thinking, what's happening to my big brother here? Is this the life you are living here? You are hiding me? I just came on a visit. What's the problem? But that's nothing is what? Permanent. Now when they come home, I've got one whole separate room there. She can live there 6 months and I don't have to run from anybody. Do you understand? So wherever you are, you can also become your own. Everything takes time, but you got to put your mind to it and you've got to work. You don't have to be lazy. Laziness will not give you results. And it's not only prayer. Not every day, oh Jesus, da, bo, shake, talaba, ga. You got to stand up and go and work. Amen. Some Christians don't like to work. Every time they are complaining. This manager hates me. This manager hates me. This manager hates me. I think it's the spirits in my home. I think it's my hometown. I think these people from my hometown, they are following me into the UK. Why? Why are they following you here? What is the problem? We've all been there. But you've got to come to a point where you realize you need to do something as well. Take some steps. So sharing is good. You may have to share. You must decide when you want to evolve. That's a very important thing. When you are sharing with people, you need to know when you want to evolve. The time comes, you've got to move. You don't need to wait for them to tell you. You need to move. Because that's the time. If you stay beyond it, you are going to start to have problems with them. You can stay with your own family and start to have problems with them because after a certain point, it's tipping the area where they are starting to upset you. And sometimes it's very sad, but it happens. So you own your own property, good. Has its own demands. And when you own, that's also good. Most of the funds go into this to help you to maintain the mortgage. When you own a property, you've got to be very focused. When you own a property, it helps you to keep focused because you immediately learn how to manage money. Even if you don't know, you will learn. Because the least mistake, the bank is coming for the house. And you really don't want to feel like you are renting again. So it will put you on your toes. You prioritize making sure, if nothing, you have money to pay your mortgage. That's the minimum key I tell people. Pay your mortgage and then just eat rice and oil and just cook that. That's okay. It's better. Rather than miss the mortgage because you love too much Indian. That's a problem. If you love too much Indian or Asian or Thai meals and every weekend you have to have an eat-in, that's a problem, brother and sister. That's a huge one. Because if you miss, you can't tell the bank I was having an Asian party. That's not going to work. They're going to come and take the house from you. So I've seen some people, they came into the bank, we're having a review that thing, and the bank, some of the things they trained us is that from a bank statement without anybody's name, I can tell you it's a woman or a man because they train you to that level. Why? Because the expenditure, the lifestyle can be seen in the transaction. You can see that this is Uber, and then you just see something like Victoria's Secret. Then I know that either it's a lady or a partner who really wants to spend on their lady. That's it. So when you see that and then they are missing a mortgage payment, my next question is, you are spending too much time at Victoria's Secret. Too much time. What are you buying? Then and with customers, we need to show them. Because sometimes they don't see it. So I will need to work out how much they've spent there and then prove to them that if you can reduce this, sometimes it's only by £50. They just need to reduce something. Sometimes you need to tell a customer that reduce your Sky plan. Reduce it. You don't need to have the whole thing with sports and the Max and Premium Plus. No. If it's going to make you go into your overdraft, no. Because it's affecting your credit. Many people don't understand credit building is a whole big thing. And when you go into your overdraft and you live in it, in the bank, we call it over-reliance. That's what we call it. And unfortunately, the bank will not tell you this. The average banker will never tell you this. Because all they know is they just got a job to do. Look, you owe money, just pay the money. So that is why we do things like this, because I have friends who are into this thing. They will never share some of the stuff I share. But there's no point teaching you if I can't tell you some of the secrets. As long as I'm not teaching you to do something wrong, then it's fine. I need to teach you the way to actually manage finance. So some people are excited. I've got an overdraft. Like I stopped using overdrafts for more than 15 years now. I don't have one. I don't have one at all. I've come to the point where if I don't have the money, I just don't have it. And that's the end of it. Because when I have an overdraft, I will go into it. I have managed customers. You see, when I was in the bank for 16 years, I was managing C-suite clients. My minimum customer was earning £250,000 minimum. So I was managing some of the top execs in the country. Google directors, this. Those were my clients. I had 600 of them for 16 years as a wealth manager. And I met clients that we started the journey, they only had £1,000 overdraft. In a few months, every month we are making the review, they are at 999. And this is somebody with 250,000 annual salary. And so, Ado, can you get me an overdraft? Okay, John, how much do you want? 10,000. Okay. Then I get it for them. They were okay with 1,000. After 3 months' time, when they come in for another review, they are now spending 9,999. You see, they've moved from the 1,000 cap. Do you know why? Because the overdraft is an unseen money. And they keep swiping their cards because the money is there. So they get into the cycle and then they've maxed it. Then after a few months, they are now struggling because they start missing, going past it. And that's what we call unarranged borrowing. And the bank started charging people. There was a certain period a few years ago. The bank started charging people terribly. So the FCA had to cap it and say, now every bank in this country, you can only charge this time once. Because people were sometimes from going over their overdraft by £1, people were paying £300 in penalties. Because the bank started charging them like £65, £20 per day. It was terrible. Thank God for the FCA, because I think this is one of the best things I think you can have in the UK financial system. When they see the things happening, they implement certain reviews and then they change it. So they cap it. This customer, after a few months, because they're now paying too much penalty, the bank also, that's why credit is a very terrible thing. It's good, but it's terrible. The system is created to always make you owe. That's what we call a credit system. It's built to make everybody what? Owe. So you are always a borrower. But that's not biblical. Because we are meant to be lenders and not borrowers. So in the Christian world, we are teaching people to become financially aware. And even in the normal world, without God, we are teaching people to be financially aware, to become better managers of their money. So at a point, this client went to 100,000. Within the same year, he was using all of the 100,000. So you've got to think, within 10 months, from 1,000 overdraft, that they lived on for 5 years of their life, they never had any problem. The moment they had 10,000, they started getting problems. They went to 100, they were now living on it. So 1,000 was no longer enough for them. Why? It's a lifestyle. So the point after that, I think I took him 150, and then one day I told him that, look, if you are not careful, you are going to be getting overdraft equal to your salary. Because you are now 100,000 shy of your salary. That means you're literally working for the bank. That's what that's happening. And these are big bank executives of companies. And most of them sometimes, not all of them are financially savvy, but they are great at leading the companies they are in. And they say to you, Ado, you know what do I do? I said, well, we're going to start this way. I'm going to reduce your overdraft by 10,000. We'll look at the things that you are overspending on. We'll cut it. And we were able to take him down in 2 years' time, and he was out of overdraft again. We left him, and he managed to live his life without overdraft. He said, but how did I not know this for over 5 years of my life? I said, because you were just excited. When money is there, you just use it. You pay your mortgage. When you go to visit a friend, and you only went to visit them on their birthday, when they pop up a big champagne, you want to be the one that pays. It wasn't part of the visit. That's part of the plan. Why are you paying? And we are not saying be bad, but why are you paying? You only went to visit them. Give them the birthday present and go. Don't say, well, the drinks are on me. Yeah. Well, this is your overdraft charges. So think about that next time. Don't tell me the drink. And that's what they've been doing. How do you know what? Because sometimes you ask them, why were you in this pub? Oh, I saw a couple of friends, and then I I just put my card on the tab. Oh, wow. Well, they just spent 30,000. Oh, well, okay. So once you take it off, you'll be fine. You've got to know some of these things. You've got to be a good manager. Let's move on, Pastor. Own your property. I've spoken about that. You can own it, take care of it. You can build up some surplus income if you have other properties. Property is one of the greatest things. It's great because if you manage it well, you'll be able to sometimes get a few good income coming out from your property. So there's a property, the example I had, one property I had in Manchester, and my mortgage on that property is £370. My rent is 850. Brilliant. That's about £500 a month, right? If you have 3 of that, that's 1,500. That's almost getting close to your salary. So it has its benefit. It has its downside. Owning property has its downside. That property of mine, all of a sudden, I had some roof problem from nowhere 2 years ago. It cost me £18,000 from nowhere. I need to look for the money to do it because I was a tenant in the house. So owning property is good, but the disadvantages are that sometimes certain things do happen. And that is why you need to also have insurance. It's important to have insurance because if you have insurance, then the insurance can go in and then help you with some of those things. There was a survey that was done, because I'm touching on insurance, let me tell you. There was a survey that was done that said that most people, 60% of households have less than £5,000 in savings in the UK. 60%. This was conducted by Legal and General. 60%. A survey, a report that also said that people believe that they will be able to live with 12,000 in savings and they'll be financially secure. But in reality, when they check, only 60% of the country has at less than 5,000 in savings. 37% have less than £1,000 in savings. And 16% have no savings at all. And that's the reality. When we meet as customer, normally we ask them that in case everything was to fail, how long do you think you can sustain yourself? Most customers will probably tell you 2 months, about 60 days. But then the reality from statistics is saying that it's about 19 days. Because it's not. You might think it's not 2 months. 19 days, because look, if there's no money coming in, by the time your rent goes out, and you need to buy a bus pass to even go and start to look for a job. And you have to, if you have children, that's another extra expense. That one is big because they don't have any structure. You understand? No structure. I have 3 girls, no structure. My house, I get worried because I keep thinking my neighbors are wondering, am I doing production in my house? Because every day there is somebody from Amazon who is delivering in my house. Every day. Every day. Every day there is a post in my house. Every day, now that I'm doing hybrid work, sometimes I'm working, then then I wake up, I just go, I'm in the middle of a meeting, then I go and then delivery. And it's my name on it. Everything has my name on it. Why? Because it's my card. Connected to the Amazon. And all I know is out till they come. Daddy, have you seen the refund? I said, what do you mean? What refund? I bought this, I returned it. They have to return the money. Where's the money? It will come into your card. Okay, then I have to now go into my account and check. Where is it? £8.52. No, it hasn't come. Okay, they go and do email. That's the problem. So you need to be careful. Expenditure is a very big thing. When you get children, be very careful. Only bring birth to the ones you can manage. Don't bring too much, because some of you just get too excited. And then you are 1, 2, 3, 4, 5. That's a problem. When I had my 3 girls, my mother recently was talking to me, said, oh, it's a boy coming. I said, Mama, no. No boy is coming. I have finished. I am happy with the 3 girls. Please be happy for me. And let's all be happy. Amen. Because it's too much expenditure. So I don't want another Amazon. I asked my girls one day, I said, Pastor, let's move to the next thing. I asked my girls one day, so if we have a boy years ago, will you be happy? They say, oh, no, if it's a boy, it's okay. I said, what about if it's a girl? They said, no. I said, really? I said, okay, then that's it. We won't bother because I don't know whether I can guarantee I'll get one. I said after the first one, I was guaranteeing I'll get one. You came, you were a girl. Your sister was very different to you, but she also came, she's a girl. That's the day I said I won't have any more children because there's no signs to that. So, Pastor, unless God comes and show up in my room, that's why I told my mother, show up in my room and tell me, my son, this time I am God. The next one is going to be what? A boy. Then I'll proceed. Oh, yeah. You know, my last girl is now 14 years old. So, thank God. My big girl just graduated from Warwick University, July. That's a great blessing. Great blessing. You know, so God has blessed me. I'm happy. I know how to buy women's things more than men. Always I tell my friends, that's it. Because all my life I've been buying women's things. All my life. Everybody. So when somebody is looking at my bank statement, like what I do to people, they will just know that this guy, everything is women. Victoria Street is me. You know, I have too many women in my house. I'm the only man. You know, so they also treat me well because they are helping me. I beg my little girls that when you marry, the only condition is you must carry my name and add it to your husband's name because I don't have any boy. So that at least it will remember me, that your father, I was also around. And I said, please, whoever comes, that's going to be my only condition. That you can have this lady if God permits, but add the name there and add your name. That's it. Is that too much to ask? That's not bad. That's family. So if you are living with family, these are some of the things you need to be very careful of. Good options, similar as the others, convenience, but may not allow you to move on in life. Sometimes you can stay with family, you never move on because they are happy. No mother wants their daughter to move or their son to move because when they are home, they are excited. That's the truth. Recently, I realized my father, when my sister's children were all living there in Ghana now, they were all going to the US. I realized the last two, he became very, very upset. We're wondering, why is this man? Why is he upset? Then later I asked my mother, I said, why is Dada a bit upset about this thing? He said, because it's these children that are keeping him happy. He takes them to school. He doesn't let any driver take them. He will take them to school. He will iron their stuff because we are all grown now. So I realized, he goes, when they go, it's just him and my mother now. So you think, well, there's no more job to do. So family, if you are not careful, you can't move on. But then we all said to him, look, but our sisters must also learn how to help their own children so that they can also pick up in life. So family, you can stay there, enjoy it, but you might be having a problem and you never move on to get your own property. So what are the benefits of family? Save. Don't play. I tell my girls, save. I say, you are living here, you're not paying any rent. Start saving. When you get small jobs, you got the one who's doing this, he's waiting to get a job in a big company. I say, just take in a job and start. That's the way the world is. I worked in Gap. I worked in Next. I worked in Tyra. I worked in there's a company they used to call, I forgot them now. They used to be in Victoria. I was cutting baguettes, upper crust. It used to be called upper crust. You know them with the yellow sign. Yeah. Baguettes. Cutting baguettes. BLT. All of them, we did all of them. Yeah. So we didn't just show up like this. We've been working. Whilst I was studying, I was cleaning in the underground. Whilst I was in school, I was cleaning underground. Every Saturday after church, we go for church with Dr. Tete. We finish from playing the keyboard. I go straight to Kennington Station, underground. Clean. In the morning, I was doing cleaning in GlaxoSmithKline. Now it's called Glaxo Wellcome. In fact, they've joined now. One of the biggest pharmaceutical companies. Morning, before I go to school, come back. And then come and do my evening 2 hours there. We've done all of it before. Key job, all of it, we've done them. So we're not just sitting here and say, today I'm a very qualified PhD. No. I have cleaned the floor. I have mowed in a Burgess Park. Who knows Burgess Park? It's Oak End Road. I mowed. First time I hold a mower, because when I came from Ghana, I've never seen a mower. I've never seen one. You know, it's not even a joke. I had not seen a mower in my life because we are not rich people. We are not rich people, so I don't even know what a mower is. My father did his best to bring me to school back in 1998. See, that's how long I've been here. And then I did the mower. So today, when we are talking to people, sometimes we are telling them we are talking from experience. We are not just talking from, we didn't just show up. I'm not an Ivy League student. I came from I don't know what school I even went. My school, you can't find it on the computer. You understand? You can't find it. The only ones you can see are the ones I did here when I came to the UK. The ones in Ghana, you can't locate them. They don't have internet status. None of it exists. Do you know your credit? Very important. You are enjoying it? This is good. It will help you to remember more. That's the way to do it. Do you know your credit status? This is a very important thing. What's your scores? What are your points? Are you part of those who borrow and don't bother to pay back? There are some people, every time they love to borrow, but they don't want to pay back. Everything, they are there. Every new designer, you have one. You are stripping your future. You are stripping your future with present gain. That's what we call credit. When you borrow, it's what? Stripping your future in your present. That's what credit cards are. Future money. You take it and you eat it today. Swipe. All of you, some of you just swipe. Do you know why the credit card is good? Credit card is good for credit protection. When you pay with your bank debit card, you don't have protection. The only protection, thank God for the FCA now. The FCA have also brought in, all of you have heard that thing, they call it app scam. When somebody now takes money from you, the bank has to give you the money immediately within the 5 days. And then the banks have to now fight between themselves and try and get the money back. That's because of consumer protection, that the FCA is making sure they enforce it. But previously, in the absence of the app scam, debit cards is just, yes, we call something indemnity in the bank. Of course, indemnity is indemnity. The bank can give you the money because they have an indemnity insurance, and then they will pursue the scammer to get the money. But credit card gives you protection when you pay for things because it's part of the credit card protection law. So when you are buying things, sometimes when I'm buying certain things and it's in a weird place, I'll just use my credit card. Buy it, and then I'll go and use my debit card to pay it off before the bill comes. Some of you buy it, you don't pay. And then the interest will come up, it's 19.2. You are just losing money. So 30 days, most credit cards will have 30 days lapse before the interest will pounce. So buy it in 30 days, pay it. I even say to customers, when you want to build your credit, don't use your debit card. If you have the money, keep the money. You want to go to Tesco, use your credit card to do the food shopping. That's how you build your credit. When you buy the food, when you go home, 2-3 days, transfer the money straight from your debit card and pay the credit card off. If you use your debit card consistently, you are not building any credit because it's not doing anything. It doesn't register on Equifax, it doesn't register on Experian, it doesn't register on TransUnion, none of them. None of them. So you use your credit card, use it for something you can pay immediately, not the other way around. So don't go and buy something big and then you don't have the money for it. That one, you take time to pay. You can still do that. So, but do you keep up with your payments? This is one of the important things. You know, now the world is changing. Previously, you could get a mobile phone without any problem because they were not doing credit scores on them. Now they do it. You might not get a mobile phone, even pay as you go mobile phone. You will not get it if your credit is wrong. You will not. So and the secret is what? Keep up payments. Keep up. You are better off to always speak back to your creditor than leave them. Because the problem is when you are in debt or you are struggling with money, sometimes the pressure, when you see the letter, you rather take it and put it in the bin than open it. We've all been there before. But in the financial world, as long as you are avoiding the letter, you are messing your credit. So under the banking code, there is something that we call consider all cases with empathy. It's part of the banking code. It's enshrined in the banking code. Every financial institution must consider every case with empathy. So when you are struggling and you write to a bank and you tell them that I'm having challenges, I need you to help me. Under the banking code, they need to help you. They cannot say no. They've got to find a way to help you that they can receive their money and you can also be free. Because we've seen people who have died because of credit card they owed. We've seen people in my working life. I've seen people who have written letter and left it to the bank and said, because I owed 50,000, I couldn't bear to. I don't want my children to pay it, and then they've taken their life. So, but what they don't understand is they don't know there are things like in the banking code saying consider cases with empathy. The banks don't want to take your house. They would rather you come and talk to them and tell them, I don't have any more income. The only income coming is from my family. They can give me 800 pounds. My mortgage is 1,200. There's no way I can get any money. Find a way to make it work. The bank will change it to make sure it suits the 800, and then they'll give you about 6 months to 1 year, and they'll review it and say that, okay, can you now add a bit more? They're not just going to say we'll take your house. If you go to the ombudsman will say, well, you've not given them a chance. They said they'll pay 800. Adjust the bill and let them pay 800. If they default, then you can go in. So keep up payments if you are struggling. Don't ignore. That's a big thing. Don't ignore letters. Arrange options with your bank provider and what we call something called the notice of correction. If something wrong has happened with your credit status and banks or institutions are now going to struggle to give you credit, you can do what we call the notice of correction. It's a letter you write to explain to every financial institution in the UK that I had this problem, like there's a case I'm dealing with now, and then the guy took a 3G mobile phone. When he took the contract, they gave him a Wi-Fi dongle on top of it. He didn't even know. And by the time he ended the phone contract, the Wi-Fi dongle contract was still going on. And so when he challenged it, they said, oh, well, it's a mistake, but it was part of the deal you had. No, so what has he done? He's done a letter and sent it to Equifax, and Equifax has now added it to his credit. So anybody that does a search on that guy, the letter comes up. That's what the notice of correction does. Anywhere they do a credit search on you, the notice of correction will pop up to say, this is from Mr. So and so. He did this, and there is a dispute on this case. Before you make a decision, consider this matter before you make a computer decision. So that's what notice of correction does. So it's very important. The only disadvantage of a notice of correction, the moment it comes on your credit, no institution can do an automatic credit search on you again. Like when they do it, they will never get an instant report. It has to be a manual underwriting. Because normally the systems will do automatic underwriting. But the moment the notice of correction is on your file, automatic underwriting is gone until it's removed from your record. So I even tell people, only when it's necessary before you should do a notice of correction. Because there are certain applications, you really don't want an individual to manually underwrite it. Unfortunately, some people are biased. And they shouldn't be, because it's a professional thing. But there are people that can access an application. I don't feel this is right. Meanwhile, the computer would have agreed it. Yeah. I've sat in credit committees. There are people that, no. Don't you see this missed payment here? I think it's enough for us not to approve it. And then that's it. Whereas the computer might have a little margin to be able to say, it passed it with just 2 points is enough. Let's just approve it. So all of those things matter. So sometimes when you are doing these things, pray as well. That's why we are Christians. Pray. Regardless of any other thing that happens. That's why I say to people, that's the difference between me and another advisor. I don't mind. It's not nothing. I don't have anything against any of my colleagues. But every case I do, I pray over it. There's no client I have met that I don't pray over their case before I start. Every case. Every case I'll do. Especially when I'm about to do the decision in principle, the credits. I always pray. I say, Lord, give me favor for this customer. Give me favor for them. Because this is important. I may not be able to influence anything, but that prayer, God might be able to do something. Sometimes it might be something small that can make that mortgage decline. But God can say, this guy just prayed for them. And then you make it work. So that is that's why it's important that we also have believers in the marketplace. It's important to have Christians in the marketplace. Because if you don't have Christians in the marketplace, you have a problem. Because there are certain situations I've stepped in the bank where, because I'm a believer, I was able to add my voice, even to the senior execs, and tell them that, no, this is how we do it in church. Sometimes the bank doesn't understand tithing. So they can see a bank account and they say, we want to close the bank account. Why are you closing it? Or someone keeps sending this money that every time tithe. It's what we do in our walk with God. So it's part of it. So we need believers in everywhere. These are the credit agencies: Access them, Equifax, TransUnion, Experian. These are the three major ones. There are more now. There is Noodle, and Noodle has turned into TransUnion anyway. There is Call Credit. There is so many of them, but these are the three major ones that are recognized. So ideally, everybody should try and make sure you do this. You assess this, and then you have it. When you need it, you do it. Some people like me, because of my work I have a subscription to Equifax. It's been on my thing for over 10 years. Every month I need to know what is happening. The moment something flashes up, I need to know what has happened. Oh, somebody is going to search my file. Sometimes in that process, I've seen where people have searched my file and they were not meant to search my file. So immediately, I quickly call. Yes, see. Now get the information. I called the person. I said, why did your company search my file? I've not done anything with you. Why? And sometimes you trace it and it's somebody selling your data. So you need to be, that's why these things are sometimes important. I'm doing a good job for Equifax and the TransUnion. They need to give me some money. And then defaults. These are credit stuff. Defaults. If you miss a payment, if you do defaults, it affects you. Every default will stay on your credit for 6 years in the UK. 6 years. It doesn't matter whether you've settled it. It still stays for 6 years, which means it can affect any application you are doing. Mortgages, it affects it big time. But there are banks that will allow defaults 1 in 12 months, 1 in 3 years. Those are all parts of the credit policy guidelines. But defaults will stay on your credit for 6 years. Missed payments, sadly, also affects your credit big time. So now, that's why I was talking about the mobile phone era. Mobile phone is now become a part of credit. So even missing your mobile phone bill is now going against your credit. So you could be paying your mortgage or paying your house rent, but then if you miss your water bill, it goes against you. And by the time you really need it most, that missed payment might affect you. Very important. Another important thing to note is there are people you like opening too many credit accounts. You see this mobile phone, you go and get some. You see this, you want to get this from every time you are buying something on credit. When you have too many credit accounts, or you are trying to open an account and it's declining, ideally when you do 1, 2, 3, stop. Don't do it again. Because when you do it, what we know in the banking world is that we call it the name has just gone back. We always say that you are desperate. You are desperate. When we see that there's been about 3 credit searches on you at the same time and it's all being refused, then we say that person is desperate. When we see they are desperate, normally we wouldn't want to approve the case because it means they are looking for something. Meanwhile, holistic banking we should be able to talk to the customer and find out, why are you trying to do it? And they might say, look, I have no bank account, so I need to get one to be able to get my bill. Yeah, then that's fine. But don't do repetitive things. There are people I used to know, multi-banking. They have bank accounts with every bank. The moment they open one account, they go to Santander, they open. After that, they go to Barclays, they open. Halifax, they open. Nationwide, they open. Whoever. Everybody, you have one. It is not good. Do you know why it's not good? Because it doesn't build your credit. Do you know why? Because all of these banks, they have to report to the credit agencies. Now, if you are not using all that account, the report that is going is what? Zero, 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 dormant, dormant, dormant. There's nothing positive going. So it's not doing anything. And sometimes the other thing is that you are spreading the money with all the 6 banks. So you will never have enough to build up enough credit points for the bank to give you something. Because your banking, we call it the banking lifestyle. Your banking is also used to create a picture of you. So if we are looking at credit scoring, there is internal credit scoring and then the external one that comes on Equifax. Every institution does that. Your internal credit scoring is built by how you transact with your bank account. So if every month you are having, let's say, 1,000 pounds in, the bank knows that end of the year, you always have 12K. If you are all of a sudden now doing 200 pounds because you are spending the remaining 800, you divided it into the other 5 accounts, you only be having what? 200 times 12. So for you, you are not a very credit-worthy person for the bank because they think this person only brings in 200 a month. Meanwhile, you are getting 1,000. That's why multi-banking isn't great. So it's all part of building credit. It's okay to have one account for maybe your main bills, one account maybe for emergencies, one account maybe to do your regular something. That is fine. But too many, nothing happens to them. Nothing happens to them. Every current account sends feedback to your credit agency. Every current account. It will send feedback to your credit agency. Savings accounts don't. Savings account don't. So, there are some secrets I can't tell you because all these things being streamed. So, that's fine. When I sit down with you one-to-one, then I can tell you some stuff. But some of the big highlights I'm telling you. Every current account, it sends feedback here. So if something is going wrong on your bank account, Equifax will know, Experian will know. Now, not every institution subscribes to all of this. Barclays may be subscribing to only Experian. NatWest may be subscribing to only Equifax. So if you are doing an application with Barclays, and let's say you have a default on Equifax, and they are using Experian, sometimes they won't see it. Just because the default is sitting on the other agency. They may have to do a very hard score probing to be able to pick it up. But that's something that happens. So sometimes even the bank will tell you, oh, well, you know what, this issue, if we are using this, then you'll be fine. So go and get your report. The bank, we can tell you that go and get your report from Equifax and let us see. Because sometimes we want to see everything, you know. But now, because of the advent of, the banks are communicating now. They communicate a lot. When a bounce back loan came, a lot of people were able to get away with it because they took money from different places, and under the Consumer Credit Act, everybody can only borrow 25,000. That's the idea. That's what the CCA covers you for. But what people were doing in multi-bank, they ran the account in this bank, then they go and take 25,000 loan. Then they go to the other bank, and then they go and take 25,000 loan. All of a sudden, under the Consumer Credit Act, they are not covered because they just borrowed 50,000 and you only cover up to 25. So that's why banks started to communicate together. So that, and the reason why we now have what we call open banking, some people it is positive, you know, but some of the other things like open banking is doing is that open banking is now telling every bank your status. It's a good thing, but it's telling the bank. Most people love it, great, because it has good benefits. If you are banking with Barclays and then you want to get a credit or something from Santander and you don't bank with them, the moment you go on the app and then you subscribe to open banking, you can allow Santander, where you want to borrow, to access your Barclays bank account through the open banking app. And then they can use what they see to give you the facility. So that's the benefit of what open banking is. In the same vein, if something and they don't want to do, because you have got open banking, they can easily tell that, nah, this is not the person to give this thing because of the information we have. So look, everything there is pros and cons. Even Jesus said there is light and there is darkness. We can't run away from it. You know, so property types, houses. So every house, there are different types of houses. There is detached, it means it's standing on its own, like this thing here. Semi-detached, it means it's either two properties put together, then there's a space between it. That's what called semi-detached. Terrace, normally you see them as a chain of block. Plenty of them, all together in one. Then, of course, you got townhouses. Then we have flats. Every flat, every house has what we call a freehold. It means that the land and the property on it is yours. The leasehold, flats have got leaseholds. It means the land is not yours, only the building. But the freehold, the land is yours. You can do anything. If you want to do small cultivation, you can do that, but be careful, because the council will be coming to you and check, have you got agricultural license? You don't start planting tomato. But you can do that at your back garden and do something nice there. It's fine. All right, so flats have got leases. Leases can be very expensive. The government is still making some discussions now to, I think they want to roll away this and take away leases so that everything becomes very simple. Or give them long lease, 999. That means till God comes. If you are buying a property that has a lease, ideally, maybe minimum less than 40 or 50, 40 years, don't buy it. Why? Because anytime you're buying a flat or a lease, the bank will look at the term of your mortgage and then they'll look at the balance of the lease. If it's only got 40 years and they're giving you a 30-year mortgage, it will only be left with 10 years, which means resaleability will be a problem. By the time you want to sell that house, it's only 10 years. Nobody can do much of it. When you are doing a lease extension, it can be very, very expensive. So when you are buying properties with leases, look for long lease. Long lease, 100, 200. Look for something long. So service charges. Most flats have got service charges. Service charges can be the most expensive thing for flats, because this is where you are living in a block of flats. You have never walked on the lawn before. You've never walked on it, because when you come out of your flat, you are right on the concrete and you are going to the station. And then in 2 months' time, you get a letter that says that we've just finished mowing the lawn. Your bill is £2,000. How did that happen? You've not even have your children jump on it. So what's happening here? That's the problem with service charge. You don't have a say in it. They do the whole thing. They come and give you the bill. They can tell you, we have changed the stairs in the common way. And then for changing that stairs, they bill you £5,000. Sometimes you're wondering, how much was it for you to change all these stairs? Not the one in your room. That's another thing. So when you are buying flats, make sure you are looking at the service charge. If it's too high, don't do it. If it's too high, don't do it. Because you always have to look at, I forgot what it is now, the name, but you always have to look at the mortgage balance and then the value and the rent. And then it gives you a certain ratio, which I forgot, but once I remember, I'll tell you. Normally, we say in London, up to 7% is good. If you are getting 7%, the name will come, then it's good. You need to work that. But service charges, be mindful of it if you are buying a flat. Ground rent is every service charge, most flats have ground rent. Ground rent normally is not expensive. Normally it's £10. Normally for most of them. That's what I'm saying, because you don't own the land. That's why they charge you ground rent. This country is brilliant. Brilliant. They do the best things. They know everything. It's like stamp duty. Same thing. Phenomenal. So the government, as soon as you are buying a house, they have to take a stamp duty from you. And now they've upped it. So it's now more difficult for a lot of people. Mortgage fees, management fees, again, it goes with most of the flats sometimes are owned and managed by a housing association or some organization. They might also charge a management fee. Always try and find out. You need always to ask for what we call the lease pack. When you are buying any flat, ask them that you want to see the lease pack. The lease pack will have information about the service charges. It will also have information about future maintenance in it. So you got to see that. Because it might tell you that every 5 years, we will renew all the carpets, all the lawn. And then they will give you an estimation. So when you check that and you realize this figure, the last one they did was 20,000, then you can quickly know, no, let me not buy this house. Because if it's 20,000 5 years, think about 5 years forward. That's a problem for you. So always look at that. Then there are some flats that are share freehold, which means that you still own it, but you own it with other people. The problem with that is good. It's better than not share. It's better to have a share freehold in a flat than just have the lease. The downside on share freeholds sometimes is that if the other freeholder does not agree to anything together, you have a problem. So you need to be lobbying them. Everything has business in it. You need to lobby them. You need to have, somebody say you have to like them by force. That's it. Maisonettes are another type of, it's normally one floor. You just enter and then you just on one floor. Everything is there, maisonettes. Bungalows are there. Coach houses are there. If you got caravan. You see, I mean, there are caravan houses. When you go towards the Isle of Dog, and then along there, you see that along the seas, you've got people that have got caravan houses. They do mortgages on them. We call them coach mortgages. Caravans. So yeah, you see people, sometimes they are driving their very expensive car with a back at the end. Yeah, some of them have got some very important things on it. So what influences price? Market forces, number one, of course. We don't have to learn. This is economics 101. We're not going to worry about that. Location, very important. The price of a property in Chelsea is going to be different to the price of a property in Croydon. 2-bed house, Chelsea, will still be different than 2-bed house on Vauxhall Bridge by the river. And sometimes the one on Vauxhall Bridge may not be decorated as beautiful as the one in Croydon. But the one on Vauxhall Bridge will give you more money because location. It's next to MI5. That's a good point. It's next to a river. Mental well-being. We need to be very careful about that as well. That's a dangerous thing. But it's good for property because when you are close to river, the best. Highest price. But if you are starting, don't start from the river. You understand? Honestly, don't start from the river. You know, because I said to people that, look, a friend of mine was telling me recently, he said, a senior director in Bupa, he called me, he said, how do you know? I need you to help me to get this house. I said, okay, what do you want? I said, do you want to spend 200,000 to buy one in Croydon, or do you want to spend 200,000 to buy two in Manchester? Location. Very simple. You got to think about that. Insurance. Insurance ratings, you know, insurance where the insurance is one of the most beautiful things, huh? Because you pay for insurance for things you didn't do. Every area and the crime statistics influences the insurance. So when you live in a place and then there is so much crime going on there, I'm very sorry for everybody living in that area because everybody will pay more insurance the following month or the next year. RPI, insurance premium tax, IPT. You pay more because it's based on what is happening there. That is why when we were growing up, we used to get a car. When we got a car, we have some friends who may be living around Chelsea. Then you use their house. It's all bad because that's fraud, right? Now that I'm in compliance, I realized some of the things I was doing when I was young, they were almost getting close to fraud. Because if you use that postcode, the premium is lower than the postcode in Brixton. Yeah. So that's the thing. Why? Because the rating in that area has got more statistics saying people are committing crime there. And so that's what it is. But now Brixton is too expensive. You can't even buy there now. Super expensive. They used to give it to people, buy. People will not buy. Now you can't even get a house in Brixton. It's too expensive. Very, very expensive. Finish of a house, the trims, the icing on the cake. Some people, you love things. You love things. You go into a house, start from somewhere. I said people, I meet some people they want to buy. They come in. I said, please. Oh, I need the one that is double bathroom. I need the extended bathroom. I need this. I said, take it easy. Because all this extras you want, when they give you the price, you can't pay. Take it easy. So work on it. Based on your icing, the price will be impacted. Transport to and from is also going to be a very important thing. When a property is close to transport links, the prices are better than when it is far off. So it's very important. When I'm buying properties, I don't buy beyond 3 to 5 miles from a station. That's my own plan. Why? Because some people, they want to live not too far out in an area, but they don't want the noise of the city center. They want a little bit out, but somewhere they can also take an Uber. 10 minutes, they are there. 3 to 5 months, 10 minutes, you are there. Job done. You are in the middle. So you got to be strategic. Transport to a location will affect the price. Amenities. What is there? Is there a gym there? Are there shopping markets there? Do you have to drive for 40 minutes before you see the closest Tesco? Then don't bother. You understand? Don't bother. Because that house will have a slightly lower price. Age of the building also matters. Every building that is built in the last 10 years will have to have what we call the NHBC, the National House Building Construction Certificate. 10 years, it gives you guarantee. If it's above 10 years, it's not worth the insurance money. So you just get normal insurance, that's fine. Type of building, concrete buildings are very hard to get mortgages on in the UK. Very, very hard. Only a few banks will give you money for a concrete. They still lend, but extremely hard. So if you are buying a property, you see it's concrete, walk away from it. You could love it, forget about it. That emotion will not help you. Yeah. So, oh, Pastor, I've lived in this area. Sister, you have lived in the area. The mortgage is going to give you a headache. When you are selling, you struggle to sell as a mortgage. So the emotional attachment has to go. Concrete is okay, but not great. Bricks, fine. Standard building, these are fine. Anything that is not standard, we call them non-standard for insurance purposes. They are called non-standard buildings, non-standard property, non-standard. So you're careful about it. Affects the choice of lenders. As in fact, I've just explained it. And then your own preference. You might want to be here, you might want to be there. Your own preference can affect the price. Thank you, Pastor. Yeah. Fees. Agents' fees. Estate agents are charging fees now. Previously, they used to do it to the, even you the one buying. They could charge you the one buying just when you're going to buy. Now the dials have turned. They tend to charge the seller. They tend to charge the seller more. So there are agent fees you pay. There are finder's fee depending on what it is. You know, so a friend told me, oh, Pastor, I don't have time. I'm very busy. I don't know. Okay. Can you help me look for the house for me? I said, okay, I have a fee. You have to pay. Finder's fee. So you have got a finder's fee. It's my time. When you are sleeping, I'm doing the research. One of my friends, a millionaire guy, and then one time he came to me, oh, I'll help you, let's buy this thing. I traveled to Peterborough and these things in 2 weeks. I was there about 5 times. Because he hasn't got enough time. So what was I doing? I need to go and then explore. Check the location, meet the estate agents, ask the questions, try and assess what is happening, and then come back and say, okay, these 3, 4 houses are the top 4. Then I break down for him house, benefit, price, boom. He says, okay, can we go and just look at this? Then I go back and then I arrange a meeting one day so that we can come in. He hasn't got time. Once we get there, 1 o'clock, 1:30, 3 o'clock, 5, train station, back to my home. So that's what we call finder's fee. So sometimes people say, oh, but why have to? You have to pay that because if not, go and do it yourself. It's not any problem. It's not by force. You understand? That's okay. Yes. So you know, the Bible says what? The laborer is worthy. One of my friends told me some time ago, a banker, the guy, we traveled to Dubai to do a transaction at the DIFC, the financial center. And then when he came, he said to me that, Ado, please, I need to get my money from your client. I said, why? You're not doing it because you know me. He says, the way, you know what? That's the scripture he quoted to me. He sent me that scripture. The laborer is worthy of his fees. Get me my money before my relationship with you spoils. Oh, I've not spoken to him for a long time. I think it really broke my trust for him. Because I thought he loved me so much that he would do it for free. He said, no, you've got it wrong. So please remember that. And then government taxes, I told you. Stamp duty, government dues, conveyance and searches, all of those things, you pay for it. You know, I was dealing with a client, a teacher, last week. And then he said to me, oh, I referred a solicitor to them. He came back, he said, oh, how do they are very expensive? I said, please look for another one. go and look for another one. The one I referred to you, the expensive. I'm not a solicitor. You don't have one, I referred one to you. You are complaining to me. Go and look for another one. Very simple. So everybody has got what? Taxes. And some of the taxes, he wasn't looking at it. So when I looked at the bill, he sent me the whole bill. And I looked at it and I realized all of it were standard charges from the council, from the government. And the solicitor's fee was actually just £900. I said, for all the work they have to do for you, they only charge you 900. You are seeing the big bill. You are saying it's not their money. So please always be aware when you're into properties, stamp duty. You need to know the solicitors. You need to have the right solicitor. Not every solicitor is on every panel of every bank. So sometimes when you go to the banks and you are doing an application, when you are submitting it, the bank will say that, oh, look, this solicitor is not on that panel, which means you either have to go to the solicitor that you know, and they might have another friend who is another solicitor who might be on the panel. Then they can give you their name and then you use that to put. So that's also important to know. Mortgage advisors and IFA fees, like people like me, you always have fees, as I said. So you see them, some don't have any fee, some have a fee. I say to my clients that, look, it's not about you pay for. There are people who are doing a very great job, they don't charge. Unfortunately, I am a little bit busy. If I'm giving my time, I charge for it. But this one, I'm doing it for free because this is my own brother. So, and you are all sons and daughters of God. So that is very, very important because we need to help the believer to become wealthy. That's the important thing. So for Christians, I don't worry myself about them. I can do anything I do for any believer with my heart open. The problem is that not all of them apply wisdom. Because sometimes when you are doing it for free, they think that, oh, this guy is cheap or he doesn't know what he's doing. No. There are people that have come to me, they talk. I just tell them that I'm not doing your case again. I'm not doing it again. No. I said, I'm not doing it again because you don't even have decency. It's taking me years to be where I am. I've worked as an underwriter in the bank, and the things I know personally, some average brokers don't have a clue because of the length of things I've done. So people must always make sure you pay for what you get sometimes. You know that? Of course. Pay for what you get. So please know that. Bank charges, valuation, product fee, application fees. When you are going to buy a property, the banks might charge you for valuation fee. Depending on the product, there can be a fee. Depending on the application, there can be what we also call an application fee. When you're doing fixed price, they can. And they've got bridging fees. Sometimes, depending on the deal, you might have to go and do what we call a bridging loan. A bridging loan has fees on it. A bridging is not a good way to go into property. I know friends that have built property portfolios now using bridging. Once they bridge, they buy, they exit with a normal mortgage. So that's another strategy. But you've got to be very calculated to be able to do that. Very calculated. So bridging is where you go to a bank that can just give you the money, short-term, high interest, sometimes up to 1% a month. But they give it to you 6 months to 12 months. You determine the time. You can have the interest rolled up for 12 months. You buy, you need to exit before the bridge finishes. If not, the interest on it, you can't afford it. So, but you can use it to, I know a pastor that has used it to build over 10 properties now in the last 4 years. And all of them are not on bridge again. He just used the bridge to get the property, and then he gets a mortgage out of it. And then he moves on. So if you know the strategy, it works very well. Redemption fees, anytime you're paying off your mortgage, is what we call a redemption fee. So that's also part of it. The house buying process. Know what you want. Know if you want a house or a flat, you got to choose those things. Choose your area, your price, your budget, you got to know. You must also have a deposit. You need a deposit. Thankfully, there are 1 or 2 banks in the industry, in the system now, who are doing 100% mortgage. Now this time around, the overvaluing doesn't exist again. The UK market has grown so well, nobody will overprice a property again. It won't work. It doesn't even happen. So there are genuine banks now who are doing 100% mortgage, pure 100%. You put nothing down, they use your income, you get the house, you are done. The disadvantage, some minor disadvantage, is that one of the banks who is doing it very well now, they are only doing it for 15 years, so it's not very long. So it makes the mortgage very big. Some banks will do 100%. Banks like Barclays and other banks, they might do 100%, but they will need somebody you know to put down 10%. And they put that 10% in their own savings account. They don't have to put it they just keep it in a savings account, and the bank say we call it ring fence. They ring fence that money. They don't have to use it for the first 2 years or so of your mortgage. so that you keep, if you miss your payment, then you can go to that person. But as long as you keep your payments, at the end of the 2 years, they release, they can have their money. But their money is also earning interest, so they're not really losing. There are friends that you might have who have got money, and they're not giving you the money. They're just going to keep it in a savings account in the bank as ring fence for you, for the bank to give you the 100%. So that's another important thing. That's why it's good to have good friends. That's also important. You need to. Yeah, because if you don't know anybody that can help you, how will you do it? It won't work. So don't look down on people, because the person that you look down on next time might be the person that could have helped you. Yeah. So be careful. Your deposit. So you need deposit. Who are you buying with? You can buy on your own. You can buy with friends. In the UK, you can have a mortgage with up to 4 people. And that's what people don't know. You can have up to 4 people on one mortgage application. Up to 4 people can go on an application. Choice made agent requires a dip. The moment you see a house now, most of the estate agents will tell you, before we show you, we need to see what we call your decision in principle. Has any bank said that they can give you the money? If you've not seen it, they not show you the house now, because they think it's a waste of time. They don't want people who are just doing house watching. They say do that on the internet. Let's watch it on the internet, not come. Get a dip from a bank or from a broker or an IFA. Whole of market or limited. These are for brokers. Whole of market are people like brokers, like myself. Sometimes we have independent markets. We can just search everywhere in the UK, see which bank is offering what. Limited, you can have just a small panel of lenders, maybe 20, 30, 50 lenders they can access. And then a tied agent are banks. Anybody that works in a bank as a mortgage advisor or financial advisor is what we call a tied agent. They are just tied to the bank. They cannot talk about any product other than the bank. If they work for Barclays, they cannot talk about Barclays mortgages. If they work for Santander, only Santander. If you go to a broker who is using limited market or whole of market, they can tell you about 10 banks. That's the beauty. So sometimes it's good to see an IFA outside of a bank. You can hear your bank and then go to an IFA. Because the IFA is not assessing a different industry. It's assessing the same industry in the UK, which has your bank also on it. So whatever the bank advisor will tell you, the broker will tell you that same thing, plus what other banks are offering, so that you get the best. So that's why. And you got to have what we call broker ethics. These are very important, because some people don't have ethics. I've met people that have been brought to me who, the brokers, when they do a case, I was telling you, we call it procreation. The banks also pay you money. Apart from what you charge the client, the bank pays you money for doing the mortgage. Some brokers, normally, even when you go with a clean credit, they will take you to what we call an adverse lender, a lender that gives like people who are struggling with defaults. When you go to an adverse lender, they pay you more. They pay you more money as an advisor. So I have seen cases where people with very clean credit that would have been accepted at HSBC are with lenders that are default lenders. And the only reason is because the advisor wanted more money. So regardless of what your credit status is, they just submit the application straight to that default bank. You will get approved because you don't have any default. But then rather than they getting £200, they get £1,500. Good money for them. So broker ethics is very important. And not every broker wants to be happy when they hear me say, but this is very important, because even the FCA will not want that. That's not good outcome for a client. So be very careful, because sometimes you will see it and then you say, why? What happened? Like I see people, I'm like, why are you with this lender? You have no default. Then you think back later, you can't tell them, you just tell them, look, it's happened. Because I'm not here to go and destroy another advisor, so I would never tell them. But when we are teaching in sessions like this, we tell you so that you become aware, right? So high rate, adverse first property. If it's your first property and you have adverse, you might get a high rate. You should be ready for that. Some people say, Pastor, the rate is too high. Well, they will give you the mortgage. You've got some default. Accept it. After 12 months to 24 months, the bank will start reducing the rate. And your situation will change, and you can remortgage and move to another lender. So even though you've got a bad credit, when you get a mortgage, you can still move on and further and go to the income is always required. ID proofs are always required. Evidence of deposit is always needed. And then we have what we call gifted deposit. There are sometimes we have some gifted deposits and letters or gifted equity. Some mortgages, you can get it, and then you may not have the deposit. If a family or a friend wants to give you the deposit, then you can get what we call a gifted deposit letter from them. You give it to the bank will want to see the person, see their bank statements to make sure that they don't have any interest in the property. So that's what a gifted deposit letter does. It says that I'm lending this money to my friend or this family member. I have no interest in the property and it's just a gift. Fine. Why does the bank take that? The bank takes that because if anything should happen, you can come back and say you have an interest in the house, and the bank cannot take the house from that individual again. So it's very important. And when you are doing mortgages and there's someone living in a house that is above the age of 17 years, we have to get them to sign what we call a consent letter. Because if you live in a house that a mortgage is being done and you're above 17 years and you don't sign a consent letter, if they come to evict the person, you can decide not to leave and they cannot move you out. Because that's the law. They can't move you out. That's the only reason why they do consent letters. So when you sign, you are basically saying, anytime the bank wants to take this house, I'm not going to oppose it. I'll get out because I'm only a lodger here or just living here. So anything from 17, you need a consent letter. Final one. I think I'll just go about one or two more. Yes, affordability. Anytime we are lending you money, the bank will do an affordability check. This is what I was talking about. You can have money, but you don't have income. You can have big money sitting there. If your income, normally the income multiple is around, industry-wise, about 4.49. So if you owe, let's say if you earn 50,000, you just multiply it by 4.5. Let's just say 4.5. And that will give you about 10,000. That is how much the bank can lend you. Then you add your deposit to it. So income is very critical. Expenses, of course, we look at all your expenses, deduct it from it, and then what is left, we deduct the mortgage, then we say, yes, this is fine. Net is okay. Mortgage minimum criteria, your dependents will also be used. So if you have children, every child has to also be accounted for when we are doing an affordability. If you have one child, the affordability calculator will need maybe whatever, let's say £300 extra money left. If you have 3 times 3. So the more the children, the affordability is very, very expensive. And you might not get it. Some people, they have everything, but because their children are too many, unfortunately, the bank can't give them anything. So you can change an application from 1 dependent to 3 to 1, and then it will be approved. You make it 2, it declines. But what do? That's what we call mortgage fraud. Some advisors, they know it, that because they put in 3, it's going to decline. They'll put 1. Meanwhile, the person has got 2. So if something was to happen, then the bank is always going to be asking you that kind of question. Again, there are a lot of things we can tell you, but there's no need. So stress test. The bank, of course, does stress test. Stress test is where the FCA and the Bank of England have stated that if you are giving a mortgage and let's say the mortgage rate is even 5%, the banks are stress testing the mortgage. That means they will test that mortgage at something like 9%. That means the bank, FCA says that, and BOE says that, test it at the highest rate possible if they will pass. That is just to safeguard any future problem. If the economy was to go haywire and the interest rates was to jump to that level, if they can afford it at that level, meaning if you give it to them at 5%, they'll be okay. So every mortgage goes through a stress test. And then sometimes when you're doing buy to let, it goes to what we call a rental calculation as well. So income proof, they want to see your pay slips. If you are working, you got to get a pay slip. If you are working and they're even paying you cash, they need to give you a pay slip. That's also there. We've done mortgages for people in the bank who are paid cash, but they have pay slips. It's fine. There's nothing wrong. What the bank doesn't like is non-disclosure. If you are getting paid cash and the money is going into your account, as long as they are giving you a pay slip to show they are also paying your tax, nobody has a problem. That's fine. So, of course, there are questions when it's like big cash. Then you're thinking, what is happening here? But get a pay slip regardless. If you are self-employed, we have what we call a self-assessment 302. That shows your income plus any other. Sometimes you are not even self-employed, but then you still have to have what we call the asset. Like someone like me, I get my PAE, I still have property income. So I have to always, every year, my accountant has to do what we call the SA 302. So your rental income plus your normal salary, all of it has to be shown, declared to the HMRC. And then you pay tax on it. Very important. Accounts will have to be looked at. P60s also confirm what happens. Deposit proof, we need it. ID proof is there. Address history, minimum 3 years. You need to have minimum 3 years address history when you are doing an application. You can have up to 4 people on a mortgage, as I've told you. Or the 4 people, you can combine their income to do a mortgage, to do a buy-to-let, to do something else. Income multiples, I've just told you about that. You can do joint application to save time. So sometimes 2 of you can just come together and then add your income and then get the house. And that's it. It's better. Because sometimes if you say, we are waiting till we get the income we need, maybe you will not get it yet. Or the house you want might require more than 1 income. So you need that as well. Yes, Pastor. Residential mortgage, you buy to live in. When you do a residential mortgage, by law, you have to live in it. And sometimes there are people who buy a residential mortgage and then they're still renting it out. If they catch you, you have a problem. So the deposit can be as low as 5. But as I said, when I did this slide a long time ago, a few months ago, mortgages have come in now 100%. So you can even do one at 100%. Income multiple 4.49 is probably the most reasonable one. There are banks now doing 5 times. Others who are doing 5 times when you earn about 50,000 or more. So that's important. Buy to let, the deposit is 25%. When you are doing buy to let, that is property you buy to live in. The difference between that and the one, no, buy to rent, sorry. When you doing buy to let, you are going to rent it. 25% is the minimum deposit in the industry. You can't get it anywhere, any other. There's no other cheaper way around it. 25%. Income ratio, again, similar thing. They can do 125% of the mortgage. Debt cover ratio, we call it. They look at the rent, they multiply by 125, and then they use that to do the testing. The minimum income normally you need is around 25 to 30,000. So you can have an income, if you are earning that kind of money now, you can get a property. But the problem is that when you are buying a residential, let's say you are earning 30,000, you multiply it by this 4.49, it will probably only give you what? Let's just say 5. It will only give you 150,000. So the bank can only give you 150,000. And then you add your deposit, and then you can go and get the house. So that's the thing. But the challenge is maybe where you are living, if you are living somewhere here, and the bank is only giving you 150, you need to have about another 150,000 or 200 to add to that as deposit to get anything decent here. That's it. But if you wanted to buy a buy-to-let property, with this income, you cannot buy a residential, but you will be able to buy a buy-to-let. Because that will give you, say, 150,000. But you can buy a 150,000 property in Peterborough. Because it's a rental property. The difference is that you need to put more money down. 25. That's the problem. So as long as you have the deposit, you can start this way. So it's all about deposit. Some say, Pastor, what should I do? I say to them, if you have the deposit, because what I say to people, 80,000 or 50,000, 10% is 5,000. 25 would be what? About 7.5. No. It's 12.5, right? You can get 12.5 now, and then you go and buy a buy-to-let somewhere and start it as an investment property. And take your time. Take your time. You know, so you don't have to have 100,000 property. You can have an 80,000 property. Now, I bought my property in Manchester 2019, 80,000. 3-bed house. A year and a half ago, 160,000. It's worth now. Start from somewhere. It doesn't have to be a 200,000 property. Start from somewhere. Once you have this minimum income, you are good to go. Limited companies, you can use a limited company to buy, deposit again around 30%, and the owner must meet certain conditions. You must sometimes be an existing homeowner, and sometimes have a minimum of 2 years, depending on it. Then we have what we call an accidental landlords. Accidental landlords are sometimes a family member leaves a property for you, and you're not going to live in, you're going to rent it. You become what we call an accidental landlord. Yeah, it was never planned. So accidental landlords, they fall under what we call a consumer buy-to-let, regulated. That's regulated because the FCA wants the same conditions given to a residential mortgage to be given to that person because they were never a residential owner. They just accidental landlords. So again, important. Normal buy-to-lets, unregulated, are not covered. Every buy-to-let is what we call unregulated. They are not covered. So you can see an advisor. I don't have to give you any advice. I just have to do the mortgage and then finish. They won't charge me for not saying anything. But I cannot do that when I'm doing a residential mortgage. You need to give you clear advice. You can have overseas mortgages and then decide that I'm here, but I want to buy in Spain. Fine. You can go and do that. I want to buy in Africa. Fine, you can do that. International mortgages, US, Africa, Caribbean, Asian mortgages, all of them is allowed. You can use your UK income to get it somewhere else. Because the beauty is that if, let's say, here in Ghana or wherever, the income multiple, because you are using hard currency, it will be able to buy something very posh back. Because whatever they will do, say, I don't know, 20,000 or whatever, the 20,000, 30,000 salary, if you multiply it by Ghana now is around 15. So 30,000 times 15. That will give you, I don't know how much the mass is. My mass is not great. So I always use a calculator. So sometimes you wonder, how did I get to where I am? But that's the thing. So I always use a calculator. So you do that, and it might give you a very posh penthouse somewhere in Africa or somewhere like that. So buy property, other things. Buy property on your own. Start building together with someone. Join the property group. Okay, don't worry about that. Pastor, go on. So we have also other options. We have something we call rent to rent. So there are people that are also who own properties now, but the lease options. Let me use lease options to explain it. You can have a lease option. What's a lease option? You can see a property and then go and do an arrangement with the owner and take the property and say that I'm going to lease this your property for the next 5 years. And then you set an agreement to buy the property in, let's say, 5 years' time. That's what we call lease options. So when I sign a lease option with my brother here, and I say, this is your house, you want to sell it. I'm not ready to buy now, but I'm happy to sign the lease option. Give it to me. I'll go to a bank. Banks allow that, lawyers know this thing. And then I'll say, I have signed a lease agreement with this man to rent his house from him with a view to buy it in 5 years. When I sign that agreement, I can now go and look for somebody who wants to rent the house. So maybe I signed it and say the rent is 1,000. We've signed it, 1,000 a month, 5 years. I now get someone who wants to rent it for 1,500. I rent it to them for 1,500. I'm making £500. That's another way of making money. And then agreement to sell, I can rent it out and say, do you want to buy it? They say, I want to buy. I agree to buy it at 200,000. I sell it at 250. Lease options and allow you to also own properties, and then you can sell. BMV is below market value properties, where you can also then have what? Below market value. You can see a property that has been really reduced, and then you just have to buy it. Commercial properties are also for just commercial buildings. Auction, you can buy properties in auction. When you're buying a property in auction, you need to have 10% when you win the bid. The day you win the bid, you need to pay 10%. Then you have 28 days to complete. Every auction property, you only have 28 days. But the banks know that. So if it's an auction property, they have a duty to finish in 28 days. So that's for shared ownership. Is you live in a property, it's a housing association, they own part of it, you pay rent, and then you get part mortgage. That's what we call shared ownership. Right to buy, similar thing. Council gives you a discount. Some councils can give you up to 100,000 discount. And then there's a lady that came to me and I was discussing the case with them. Where she lives is very, very expensive. 700,000 the building is. They've given her 150,000, but her income is 40,000 with her daughter. It's never going to work on the mortgage. She needs a deposit of about 300,000. She said, I don't know where I'll get that. So I said, well, so that's the problem. So right to buy, great concessionary mortgages. When a family person, you can have a property and sell to a friend or a family, and then you give them what we call a gifted equity, and then you can do that mortgage for them. So that's concessionary mortgage. Lifetime mortgages are talking about that equity release. I spoke about that earlier on. International mortgages can do that. Timeshare, these are other big things in investment. Timeshare, these things are discontinued. A lot of companies were doing a Club La Costa, and all of those people, they had those things there where you go on holidays and then you get a certain stake in a property and you get a benefit. Then you can do what we call a joint borrower sole proprietor. Two people join together, you have a mortgage, but then it's only one person that is a principal. So sometimes you can buy a property with two people. You are only using the income of, let's say, me and Pastor Ben can go and buy a property. He's not going to live in, I will live in, but my income is not enough to buy the house. I can do what we call a joint borrower sole proprietor. I add his salary to my salary, and then the bank will give me the mortgage, and I go and live in it. That's what we call a joint borrower sole proprietor. I'm the only one who will be on the title deed, but his income had to add to my income to make it work. These are all available. So that's it, Pastor. So thank you very, very much. And if there's any questions, then you can do that.
Have you all enjoyed?